Hello, I'm Craig Brailsford. Welcome to another episode of Small Stocks, Big Money. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features interviews with executives of two public companies. First up is Nova Minerals, a gold, antimony, and critical minerals exploration and development company focused on advancing the Estelle project, comprised of 199 square miles of state of Alaska mining claims, which contains multiple mining complexes across a 22-mile-long mineralized corridor of more than 20 advanced gold and antimony prospects, including two already defined multi-million-ounce resources and several drill-ready antimony prospects with massive outcropping stibnite vein systems observed at the surface. We'll learn more when we speak with the CEO later in the show. Up next is GRRR Technology Group, a leader in AI-based industrial Internet of Things solutions with a strong emphasis on security convergence, video analytics, and big data. Leveraging more than 22 years of innovation and industry expertise, GRRR provides transformative solutions that enhance the safety, efficiency, and operational capabilities of smart cities, smart ports, smart buildings, and more. The company's proprietary technologies empower clients across both public and private sectors by offering predictive insights and robust network defense, driving the next wave of digital transformation. We'll learn more when we speak with the CFO later in the show. Now, before we get to the first interview, our quote of the week. It comes from the book, Small Stocks, Big Money. Invest in something you can get your arms around and be very conservative. Own enough stocks so that you are not putting all your eggs in one basket. This quote comes from Dave Maley, a fund manager at Ariel Discovery Fund, and it is featured in Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now, let's get started with our first interview today with Nova Minerals. Hello, today we have Christopher Gertuysen, Executive Director and CEO of Nova Minerals Ltd, trading on the NASDAQ under the ticker NVA. Chris, welcome to the show.
Nice to be with you, Craig.
Now, Chris, for viewers who may not be familiar with Nova Minerals, can you give us a brief overview of the company and its primary focus in the gold and critical minerals space?
Nova Minerals, we have the Estelle project here in Alaska, large project in terms of land area, 200 square miles. We've been focused on the gold, and we've been very successful in that realm, almost 10 million ounces to date globally, and internal to that, economic resources of in-pit at $2,000 gold price of over 5 million ounces. But in addition to that, we've also had very exciting discoveries now of a lot of these critical elements, and the main one there is antimony. And so that's really another opportunity that we're pursuing here in Alaska at the Estelle project.
Now, as you mentioned, Chris, that flagship project, the Estelle Gold Project in Alaska, spanning a massive nearly 200 square miles. Can you tell us more about the significance of this project and tell us why is Alaska's Tintina Gold Belt such a promising location for gold exploration?
Indeed, the Tintina Gold Province is one of the most prolific belts in recent decades for gold discoveries and gold production, over 200 million ounces now documented here in the belt. This is the land of the intrusive related gold system. This is the land where we've all heard of it, the Alaskan gold rush. Now we're starting to realize where all that gold came from. And so the Estelle project just sits on the southern end of that belt. And we've been called, it's a trend, it's a gold trend, and we've actually been called the Carlin of the North. If your viewers are familiar with the Carlin trend in Nevada, you know, this made companies like Newmont and Barrick. And what we're onto here at Estelle is certainly very similar in terms of scale and potential resource endowment. And we've already seen that. So 10 million plus ounce deposits, not uncommon in our neighborhood. And that's certainly what we're onto at Estelle. That almost 10 million ounces that we've defined to date is across two deposits, Corbell up north, which is a bulk tonnage, very large system. And then down south on the property, RPM, which has really become the jewel in the crown, very high grade system there. And the company intends to focus. The beauty of the project is that it has great optionality in terms of how we attack this, how we develop it. So certainly the project ultimately is a large scale project that the major companies are after. Not many of these left in the world. But in this current environment, we also have the opportunity just to go after RPM first, was our current strategy, lower CapEx, high margin, smaller operation, and then grow ourselves into the much larger project with that cash flow on our own or potentially a strategic partner, and we're certainly on their radar.
Now, you mentioned the RPM deposit. I've got a question about one of the more exciting developments there. It's that potential for a scalable operation at RPM. Elaborate on that. How's it going to bring early cash flow to the company, Chris? And what does it mean for long-term expansion plans?
Well, if you look at the larger project, we are currently doing a feasibility study. And with gold prices at record highs, we expect very positive economic numbers from that. The problem for a smaller company like ourselves right now is that the CapEx is around $400 million. And so that might be a bit more than we can chew at this stage going it alone. So that's what I was saying, is that we have the optionality just to start smaller and go after RPM. And it's a much lower CapEx, orders of magnitude lower than that 400 million CapEx. And with that, we can definitely handle that type of a construction finance or bridging finance and construction finance to get there, and the margins are very high. We've currently been drilling, and we're coming up with a resource update before the end of the year. And what we're looking at is our target there is 500,000 ounces at 2 grams per ton, and internal to that, a much higher gram core zone of about 150 to 200,000 ounces at 5 grams per ton. Grade and a deposit of that tenor is very, very high margin. And so we're looking at, hundreds of millions of dollars of revenue, of free cash flow for the company over those initial years. And with that type of revenue, we can grow ourselves in that much larger project. Now, those are the two deposits we have. With the project, we have 20 other known prospects at various stages of advancement. And we continue to advance those with our exploration programs and make new discoveries. Over the years, we'll be continuing to drill those, adding to our resource inventory. And so all that presents future upside for the project as we move forward, both in terms of the gold. And as I mentioned, we also have, in some of these prospects, significant copper, percents of copper, hundreds of thousands of grams per ton silver at some of these prospects, antimony, and some of these other critical elements. And so that all presents future upside. We can start small and grow ourselves into the much larger project, which is our current strategy.
Chris, it just sounds amazing. Earlier in your interview, you mentioned antimony. I want to go to that now. Antimony emerging as a key part of your focus, particularly with the Stibium and Styx prospects. Many of our viewers may not be familiar with antimony, Chris. Can you explain what that is, why it's important, and how Nova Minerals discoveries position your company to benefit from the growing demand for this critical mineral?
Certainly. We're a gold company, and we found gold at these prospects, Stibium and Styx, and you might say the antimony found us. And so I'm not sure if your viewers are familiar, but antimony is one of the most strategic and critical elements known to man that most people don't pay attention to or even know about. It's used in all the clean tech, green tech, defense tech, and the key one there is it's used in all the munitions. We produce no antimony in the United States, totally import reliant on China and Russia, who have captured the market. And believe it or not, for our munitions, we import antimony. China has just announced that they are curtailing all antimony imports. This has drawn major concern and interest from the Department of Defense to establish and fully secure U.S. supply chains for antimony, and they see our project playing a large part in that, and we're pursuing that opportunity in the form of grants, these grant opportunities to get into production as soon as possible.
Now, in light of those restrictions, Chris, how are you planning to fast track that Stibium prospect to production?
The great thing about what we've discovered here is it's right on the surface. So we observe massive stibnite being the primary ore mineral for antimony, right on the surface. And so being also the project on state land, so no federal land or native corporation land, the permitting is much more streamlined. The scale of an antimony operation also is much smaller scale than the gold operations. And in these separate prospects, it's separate from the gold deposit. So we can take this on its own path, standalone, much smaller scale, very high margin. Again, very lucrative right now. Record high prices for antimony currently at $25,000 a ton. And it's very accessible right on the surface. And so we're working with the DoD to get grant funding to do exactly that.
Looking ahead, Chris, what are some key milestones investors should be watching for in the coming months as Nova continues to advance?
We've just completed our last round of drilling at RPM. News flow coming in the coming weeks here with all the drill results, and then a resource update before the end of the year. And so I already mentioned the target, 500,000 ounces at 2 grams per ton, very high margin material. Then also concurrently, we have a lot of these technical studies. We're laser focused on delivering a feasibility study to the market by next year, in 2025. That's a key milestone in this business. That opens up all kinds of additional funding opportunities. In the interim, there's also this antimony opportunity that I mentioned, where we're looking for DoD grants to commence production on that within the next 18 months.
Chris, I'm going to put you on the spot here. Is that okay?
Go for it.
All right, now what's the essential value proposition? Sum up for us. Why should investors take an interest in Nova Minerals right now?
There's no bull market like a gold bull market. Perhaps, maybe the antimony bull market currently happening might be even better than that. But currently, if you look at Nova Minerals, it's an exciting time. We just listed on the NASDAQ. If you look at our North American peers with similar assets listed on the North American exchanges, these companies are running 3, 4, over 10 times, some of them, our current market valuation. And so that we believe coming onto the NASDAQ, once people appreciate our story, the scale, the opportunity with the gold and the antimony, once people appreciate that story, it's an opportunity for a re-rate for Nova Minerals. Currently, Nova Minerals market cap sitting around $25–30 million. And this is going into a gold and antimony bull market. Big opportunity for the investors to get in early.
It's the Alaska Gold Rush and maybe Antimony Rush for 2024. Great meeting you, Chris.
Pleasure.
Now, to get more information on Nova Minerals, visit nvainfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RED-CHIP to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com featuring emerging growth companies like Nova Minerals. Watch this show again and explore hundreds of small cap stock videos on RedChip's YouTube channel. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can also order your copy of Small Stocks, Big Money, a book written by RedChip CEO, featuring interviews with some of the biggest players in the microcap space. Order your copy on Amazon today for just $18. Now, let's move on to our next interview today with GRRR Technology Group. Hello, today we have Bruce Bauer, the interim Chief Financial Officer of GRRR Technology Group, trading on the NASDAQ under the ticker GRRR. Bruce, welcome.
Thank you, Craig. Pleasure to be here.
As CFO, Bruce, how do you approach aligning GRRR's financial strategy with its rapid growth and evolving market opportunities?
Yes, so the most important thing is that we need cash in order to grow the business. So the priority has been to keep a large cash buffer, so a minimum of 15 million of unrestricted cash. That allows us to take on new contracts, and then it also allows us to have excess to invest in new market opportunities, so exploring sales, marketing in new areas, and also spending on innovation.
That cash reserve is quite large, more than $40 million, Bruce. What is your strategy for balancing capital allocation between growth initiatives, innovation, and shareholder returns?
Yeah, so we look at basically the business development pipeline. Right now, it's over $1.5 billion. And we judge from that what we think are near-term potential wins and basically how much cash we would have to set aside in order to win those contracts and deliver on them. When we have $40 million in cash reserves, it's a little bit lower today, but about high 30s. What we're thinking is that most of that will be allocated towards growth. And then we have $6 million buyback allocated, and then the rest we're going to put into R&D. In the future, we'll keep the same discipline where the vast majority of it will go into growth. Anything excess will go first to innovation, to R&D, to keep the product portfolio growing. And then, as and when, we'll allocate it to shareholder returns.
Bruce, you also have substantial contract assets and financial assets. Now, how do you manage those to support your operational and strategic goals?
Yeah, just to define them, contract assets really mean unbilled revenue, and we're going to report them as such in the future. Basically, we perform work, we recognize the revenue as we perform it, it goes into contract assets. What we're trying to do is really to bill as fast as possible. As soon as the milestones in our contracts permit us to bill, that starts the cycle where that contract asset gets converted into cash. In terms of the financial assets, the vast majority of those financial assets have been and will continue to be guarantees in front of our customers. So, the financial assets number will expand over time as we invest in new guarantees, towards new contracts. On the other hand, we like to keep it, we like to smooth it and manage it down where possible, because that releases cash that goes into the business. And that's actually the cycle we're in right now at the end of 2024, beginning of 2025.
Guerrilla's improvements, Bruce, in gross margin and operating profit are noticeable. How are you working to sustain and build on these achievements as you scale?
So in terms of operating profit, we're really seeing the operating leverage kick in, where we have the infrastructure necessary to service double the business that we're doing now. So the key becomes really winning new contracts and then getting the gross margin up. In terms of the gross margin, we have a lot of financial discipline that we're now putting or reasserting into the contracts that we look at and that we win. So that includes, a revised rate card to make sure that we're charging market rates, a revised contracting approach where we have certain targets in terms of revenue size, gross margin, et cetera, that we expect to see out of contracts. And together, along with an improved product mix, shifting towards software, this should keep our gross margins expanding.
I want to turn now to that share buyback program, Bruce. $6 million share buyback program, undeniably reflecting confidence in Guerrilla's valuation. How do you balance these initiatives with investments in future growth?
Yes, so in September, we had up to $40 million of free cash, unrestricted cash, and we judged that we didn't need all of that in order to service the business. We also thought that the share price was quite undervalued, and we wanted to send a message to the market that we weren't issuing new shares, rather we would prefer to buy them back. So that reflects confidence in the valuation being low and our prospects. But basically, when we judge that the share price is low and also that it doesn't in any way compromise future growth in the business, that's when we allocated, and that's when we will allocate in the future, money to return to shareholders.
Give us some of the key initiatives you've got going right now to optimize cash flow while maintaining that focus on scaling and, of course, innovation.
It comes down to the discipline for how we manage existing contracts and new contracts. So for existing contracts, it means billing as soon as we can those contract assets or unbilled revenue to turn that into billed revenue and then collecting on the receivables. It also means managing our payables, our prepayments and our payables on those contracts, so that we get as much float as possible. For new contracts, we're really looking at two things. One is the timing of investment from our side. So obviously, if we can minimize or delay the cash going out from our side, and then also when we expect customers to pay us. The other thing is that we're looking at new initiatives, basically to minimize the cash that goes out to service new contracts. One is, for instance, using surety bonds instead of cash guarantees. It costs a little bit more on the P&L, but it saves a tremendous amount of cash.
Okay, Bruce, we have covered a lot of financial metrics in this interview. In your opinion, what are the most important indicators that investors should be monitoring to understand Gorilla's progress and potential?
Yeah, so the ones that you would monitor in any growing technology business, so it would be the growth metrics, and it would also be the gross margin and the operating margin or the EBITDA margin. The last one that we pay a lot of attention to is cash flow, and this can be both free cash flow and then operating cash flow as a percentage of EBITDA. In 2025, we expect, due to the release of some guarantees to our end clients, that our EBITDA to free cash flow or to operating cash flow conversion will be greater than 100%. And that's the kind of, that means that the business is growing in a very cash generative fashion. So that's what we like to focus on.
Sounds compelling, Bruce. Thanks for explaining everything to us today.
Thanks for having me. It's been a pleasure. And yeah, happy to talk about Gorilla anytime.
Now, to get more information on Gorilla Technology Group, visit grrrinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RED-CHIP to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like Gorilla Technology Group. Watch this show again and explore hundreds of small-cap stock videos on RedChip's YouTube channel. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, visit redchip.com and subscribe today. In addition to the newsletter, you can order Small Stocks, Big Money. This is a book written by RedChip's CEO, featuring interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon for $18. Now, let's recap the companies featured today. First, you met Nova Minerals, NVA on the NASDAQ. Nova Minerals is a gold, antimony, and critical minerals exploration and development company focused on advancing the Estelle project, comprised of 199 square miles of state of Alaska mining claims, which contains multiple mining complexes across a 22-mile-long mineralized corridor of more than 20 advanced gold and antimony prospects, including 2 already defined multi-million-ounce resources and several drill-ready antimony prospects with massive outcropping stibnite vein systems observed at the surface. Learn more at www.nvainfo.com. Then you met Gorilla Technology Group, GRRR on the NASDAQ. Gorilla Technology Group is a global leader in AI-based IIoT, or Industrial Internet of Things, solutions, with a strong emphasis on security convergence, video analytics, and big data. Leveraging more than 22 years of innovation and industry expertise, Gorilla provides transformative solutions that enhance the safety, efficiency, and operational capabilities of smart cities, smart ports, smart buildings, and more. The company's proprietary technologies empower clients across both public and private sectors by offering predictive insights and robust network defense, driving the next wave of digital transformation. Learn more at www.grrrinfo.com. Don't forget, check out our stocks page. It's the biggest small-cap stock portal in the industry. Every company listed on the NASDAQ or New York Stock Exchange with market capitalizations of $2 billion and less. And it's categorized by industries. Watch this show again and explore hundreds of small cap stock videos on RedChip's YouTube channel. Also, be sure to sign up for our weekly newsletter and learn about a lot of small cap companies. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, if you have any questions about any of our public companies featured on today's show, call us at 1-800-RedChip or email us at info@redchip.com. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile of asset classes. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies. So please, always read our disclosures at redchip.com. Thank you for being with us today. We'll see you next week with some new, exciting, emerging growth companies.